Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, August 5th, 2022, Jobs Day. Asset markets down, stocks are down, commodities are mixed, crypto up, dollar up, global bond yields up, market moving headlines. So both the recession call and the Fed pivot call were premature. So now what? We had looking at the jobs report, the July jobs report, we've seen hiring blow past estimates with employers adding 528,000 jobs, more than the highest consensus call and up from a revised 398,000 in June. The unemployment rate slipped, and average hourly earnings and hours worked both beat estimates. So it's about as hawkish as a jobs report as I've ever seen in my career, outside of the ones we were getting on the other side of the great financial crisis. So this continues to support our view that the labor market was overheating by double, which is where we were previously prior to the support, probably overheating by a double and a half or a triple at this point. So this concept that there's been a Fed pivot, in my opinion, I think is going to get increasingly walked back by policymakers. And ultimately, I do believe this discussion around what is the actual correct neutral rate for this particular cycle is going to be a discussion that may not end well for those who are chasing the FOMO highs here in July and August. So that is what it is. Anyway, the global liquidity cycle downturn continues. So you had the Reserve Bank of India hiked its key rate 50 basis points to 5.4%, citing a whatever it takes approach towards inflation. It sees annual price growth at 6.7%. So I want to say there's been about 80 to 85 central banks globally tightening policy throughout 2022. I have not personally seen anything like that. I don't think anybody managing risk outside of Warren Buffett and Charlie Munger have seen anything like that. You probably have to go back to the 70s to see such globally coordinated tightening. And by the way, monetary policy works with quote unquote long and variable lags in the economy. So everything these people are doing now here in the second half of 2022 may actually have an impact on growth in the second half of 2023. So if you're buying stocks thinking that the Fed has pivoted and we've priced in the lows of recession, you have to factor in the incremental tightening we're going to get between now and let's call it when the Fed probably does pivot sometime next year. Anyway, fundamental investors are selling into this quant-driven rally. I think the fundamentalists have it right for the most part from a medium-term outlook perspective. Global equity funds had outflows of $2.6 billion in the week through August 3rd, per EPFR global data. U.S. stocks had redemptions of $1.1 billion, while we saw $4.1 billion left cash, but it actually went into bonds, and the global bonds drew some 12 billion. So this is something we've been talking about in our leadoff morning notes. We're seeing a breakdown in interest rate momentum globally, JGB yields, German bond yields, et cetera, in our global macro risk matrix. And investors are now feeling confident that ultimately central bankers are going to tighten us into the kind of slowdown needed from a growth perspective to get inflation under control. We still believe that catalyst is incrementally ahead of us, if only because of this misguided Fed pivot trade. Anyway, Beijing saber rattling continues with respect to Taiwan. So China continued its most provocative military drills in decades and cut off defense talks with the U.S. A day after probably firing missiles over the island, China sent warships across the Taiwan Strait's median line in the first such incursion in years. Ships are thinking twice about heading to the Kaohsiung port in Taiwan South, creating potential delays for shipments of electronic goods. So it's mostly saber rattling. Clearly, nothing of substance has occurred. But again, saber rattling. We thought it was saber rattling when Russia was lining up across the Ukraine border in January. So could this be some sort of saber rattling that leads to something else? I think it bears watching. This is something Jim Carson and I have been talking about in terms of the one of the key tail risks we see out there that's likely very underpriced by markets is aggression towards Taiwan with out of Beijing, out of China. So again, not making that call. Not like anybody has a basis for making a call like that, but certainly this is something that is bears watching. It definitely bears watching. I wouldn't do anything today about it, but certainly keep it on your screens. And then lastly, big movers this morning. Ethereum up 5%. It's up 45% month over month. Congrats if you bought the low. It's down 39% over the trailing 3 months. Shame on you if you were hodling it that whole way down. 2-year Treasury yield plus 16 basis points to 37, up 37 basis points month over month, and up 56 basis points over the trailing 3 months. The bond market or the money markets got it wrong, unfortunately, over the last 6 weeks, which caused stocks to ultimately, which cause stocks to rally, et cetera, et cetera. Again, we think the Federal Reserve officials, even though they pulled guidance, it does create a lot more two-way volatility, particularly when you get data points like what we got this morning in the jobs report. So transitioning to our volatility adjusted momentum signals and probable ranges. U.S. dollar index, that is bullish VAMs. It is oversold. Probably it's going to bounce. It's going to bounce big probably over the next few weeks. Gold bearish. That is still oversold. So it's probably going to sell off over the next few weeks. 10-year nominal treasury neutral VAMs. That probably is going to fade back towards the middle of its range. High yield credit spreads, bullish VAMs. It's at the lower bound of its probable range. S&P 500 neutral VAMs, that is overbought. VIX bearish VAMs in the middle of its range still. NASDAQ 100 neutral VAMs, that is overbought. Russell 2000 neutral VAMs, also overbought. Bitcoin bearish VAMs, about 4% upside versus 13% downside. Ethereum bearish VAMs, you got about 4% upside versus 23% downside. And then Shanghai Composite neutral VAMs finally bouncing off the lower boundary of its range. Not looking great though. WTI crude oil, same deal here. Getting oversold, nearing oversold, about 2% downside, 19% upside. Not a great looking chart. Certainly doesn't look like, with this sort of, as I mentioned at the beginning of the show, both the recession call and the Fed pivot call were premature. This is if we're not heading into recession imminently, this is probably one of the most mispriced assets in the world right now. So we definitely, I can see crude oil rallying substantially in the coming months. As markets price out the early recession call. We're not in recession if we're adding 500,000 jobs in a single month. Agricultural bearish VAMs, that is nearing overbought. You get about 1.6% upside, 6.8% downside in industrial metals. Lastly, bearish VAMs still overbought. So with that, Darius Dale presenting our macro minute for Friday, August 2nd, 2022. Best of luck out there this weekend or this week or today, and have a great weekend. And oh, by the way, we got our August macro scouting report out next Tuesday. 125 slides of all the data you need to help manage risk across these critical macro cycles that matter. So looking forward to working on that this weekend, and we'll catch you back here on Monday. Cheers.